Thank you.
All right, guys, welcome to live help for Trade Machine. We do this twice a week, Tuesdays during market hours, Thursdays after market hours. Max is over there. Max Katz, a longtime Trade Machine member, 7 years, former option market maker, commodity option market maker, particularly in sugar, for almost 2 decades. And he's also available in community every day, trading day.
Oh, I'm there
Uh,
every day. I am there every
yes,
day.
yes, he is. You have live help, whether you like it by chat or video or whatever. My name is Ophir Gottlieb. I am the CEO of Capital Market Laboratory. Former option market maker on NYC, ARCA, and SIBO, former head of algorithmic trading, former hedge fund manager, former managing director quantitative research for a firm that was purchased by Morgan Stanley, MSCI, former trade structure with Countrywide, lots of things. All right, let's start the presentation and then we'll get to Trade Machine. I will share my screen. You can see that, yeah, Max?
Yes, I can.
All right, let's do it. This beginning will seem familiar to you because it's the same beginning, but this time I tell you why I start with the same beginning. We will start with disclaimers. The results here are provided for general information purposes as a convenience to you, the viewers. The materials are not a substitute for obtaining professional advice from a qualified person, firm, or corporation. This is not a solicitation to buy or sell any security, nor is it ever. This is not advice, and past performance is not necessarily indicative of future results. Okay, so I'm going to go through the same intro I normally go through, but this time it's going to be a little bit more meaningful. I certainly hope so. I'm putting my glasses on. The screen is suddenly so clear. To be a successful trader, you need to focus, in my opinion, on the long arc of a career, not Thursday, not January, not this week, not in 6 months, not 2024. The long arc of a career, right? It's a walk. It's a walk. It's not a sprint. You need process, which in finance we call a plan, and Trade Machine is built for this exceptionally. And I'm going to point this out in great detail later on in this presentation. This is what Trade Machine is built for. And the truth of the matter is a process or a plan simply means what to trade, when to open it, and when to close it. And if we were robots, then this is all you would need to be a successful trader. If you could magically have a plan, a process that worked, then you would be successful. You would have the long arc of a career. But we are not humans. I mean, we are humans. We're not robots. And this isn't enough. And why is it not enough? Because no matter how good of a plan you have, since you're not a robot, you're going to need patience. For some people, this is easy. For some people, this is hard. And it's really patience in not just your plan, but it's also patience in yourself. And finally, you will need effort. And the bad part about effort is that it will probably be harder than you think. So I know that's not what you're supposed to say when you sell software, but it is what I'm saying. This, the top line to be a successful trader, will be harder than you think it will be. That's the bad news. The good news is, therefore, it will probably be more satisfying than you think it will be. That's just kind of how life works. So you'll get great satisfaction if you're able to attain it. It's just going to be harder than you think. So this little thing, this little doohickey I always do. Okay, now I'm asking you to remember it. Just take a snapshot with your eyes. Okay, I'll bring it back. In the last sessions, we looked what happens when a stock has dropped and may recover. So with one strategy, we did spread the sell-off plus AI. That was selling volatility, but it happens when stocks are basically in free fall. The other one was buy the sell-off, which is buying volatility, but it's also when stocks are in free fall. And we did it across multiple sectors. And then we said, okay, well, that's when a stock has dropped and might recover. How about when a stock has technical strength? Well, then we did pre-earnings momentum diagonal call spread with AI. Right? And we did that in multiple timeframes in multiple sectors. So we have selling vol, buying vol, and buying vol. And then the fourth strategy we looked at was when a stock recaptures technical failure, another different version of a market. I just scrunch things up a little bit. And that was fade the dip. All right, that's selling volatility. So multiple sectors, when not to do something in multiple time frames. Now I want to talk about this. This is what I call a portfolio of trades, but there's a reason I call this a portfolio of trades. I don't call it a portfolio of trades because there's four things and that four numbered trades. That's not why it's a portfolio of trades. In order for something to be a portfolio of trades, it needs three characteristics. First, they have to be trades or setups that work in different times of the market. When a stock has dropped and might recover, so that's stocks in free fall. When a stock has technical strength, stocks are going up. And when a stock recaptures technical failure, so it's been bad and now it's coming back. These are different places where a stock can be, where a sector can be. The second thing that's not enough for it to be a portfolio of trades, by the way. That's not enough. The other thing that needs to be a portfolio of trades is that they have to be different types of trades. And what do I mean by different types of trades? So the ones in green are selling volatility. Right? And the way you know you're selling volatility, roughly speaking, is if you're doing a trade for a credit. This is for a credit. This is for a credit. And some of them are buying volatility. How you know your strategy is essentially buying volatility? It's if you're paying for it, if it's a debit. Buying the sell-off is a debit. A pre-earnings momentum diagonal is a debit. You'll notice that all four of these trades are always spreads because an option can only be hedged by another option. And therefore, each of these trades have a built-in hedge. They're still speculations, but they hedge some of the non-directional risk. That's not enough either for a portfolio of trades. We're there. That's two, but you also need three. You also need it for different sectors. And the reason you need it for different sectors is because different sectors can be in different parts of the market, right? Some sectors can be recapturing technical failure while another one is in free fall, while another one is showing strength, right? This is what a portfolio of trades is. This is what a portfolio of trades is. So broadly speaking now, guys, please go ahead and use chat to answer this question. What is this called? This portfolio of trades, this idea of looking at different types of markets, different types of trades, selling vol, buying vol, different sectors. What is this called? Just put it in chat. Just if you had a word or two words or a phrase, what is this called? I'm going to look at chat. I have to take chat. I have to take it out of full screen to see what you guys said in chat. Diversification, a plan. I've got, so if you see a lot, well, watch list, flexibility, all true. I'll tell you what it is. The reason we do this, and the answer you will always hear Max and I say, no matter what, catch us at dinner, catch us at breakfast, catch us at the gym. It's risk management. This is risk management. When you're available to trade with different markets and you're available to buying vol and selling vol, and when you're available for different sectors and different time frames, this is risk management. If you're not doing risk management, then you're not trading, you're gambling. And I know that on YouTube, there's a bunch of videos of a bunch of platforms that say they have AI and all you have to do is follow them. It's just disingenuous. And there's a part of you, I know there's a part of you that sees it and knows that it's not genuine. I know it. I know deep down you're like, man, that's just bullshit. Because it does take effort, right? Beyond the process and the plan, right? Beyond the patience, it takes effort. And a part of that effort is this portfolio of trades. It's not just, ooh, I got a trade alert. Come on. Come on, guys. You know that. You know it's not easy. Otherwise, everyone would be a billionaire doing whatever, trading sugar options or trading regular options. And you know that they aren't. You know, there are very few people who do this very well. You just know it. I know that you know this. Whatever your background is, it's inherent. We all have like a bullshit radar. We're like, I don't know. So I'm not actually here to show you how to click buttons on TradeMachine. Okay, I am a little. But in general, I'm not just here to show you how to click buttons on TradeMachine. That's what I've been doing with these 4 trades. Here's how you do it. I'll do it again today. Right? I'm here. And you're here to see why clicking the buttons on TradeMachine matters to you. It doesn't matter that I show you how to click the buttons and to set up alerts. The question you should be asking and the question I should be answering is why? 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 Why do I want to click these things? If the answer is because you want to be profitable on Monday, that's not why I'm clicking on the buttons. That's not why I'm clicking on the buttons. So we don't make false promises. And by we, I'm speaking with the royal we. I don't make false promises. I share facts A, B, and C. These trades are set up for different markets, different trade types, and different sectors. That's a fact. The results are facts, historical fact, right? Historical fact. And then I share analysis ABC. I say, okay, well, what exactly is the buy the sell off? And what exactly is spread the sell off? And what exactly is a pre-earnings diagonal? Like this is analysis. And then from that, I draw conclusions. And those conclusions are completely subjective. They come from objective facts, intermediate analysis, and finally, I draw my conclusions. And my conclusions are, hey, I like it when an entire sector has performed well over 3 years on a given strategy. Then I like to cherry pick the best performers. Those are my conclusions. You can feel free to disagree with the conclusions. And the reason it's so wonderful is that even if you disagree with the conclusions, you're gaining value because I'm sharing facts. That's how you become exceptionally good. It's not because of a platform on YouTube that sends you winning trades. Like, it isn't. Remember I said effort? There's two parts of effort. The bad part is probably going to be harder than you think. And the good part is that's probably going to be more satisfying than you think because it's going to be harder than you think. This is what I mean on that first bullet point with effort. I know this is a PowerPoint slide with far too many words, lots of colors, and all this is stuff you have to do if you really want to be a successful trader. I'm sorry, I don't have a screen up that says all you got to do is click this button because it's just not true. It just isn't. But you can be a successful trader. You can. It just takes effort. Ophir, what do you mean by effort? I mean this. I mean this. Becoming comfortable with the idea that you're pretty much always spreading. I said pretty much, not necessarily. Always is a big word. I shouldn't have said always. And if you're like, yeah, I just like buying calls or selling puts, I understand what you like. You're going to lose all of your money. So just skip the middleman. Because trading doesn't bend to what you like. You bend to trading because it takes effort. Are you willing to be flexible enough to, instead of running away from the thing that's not familiar to you, to run toward it? To say, you know what, I don't know what that is. A 1 by 3 by 2, I don't even know what those numbers mean. At that moment, do you move on to the next thing, or do you say, I want to know what that is? I want to know what that is. If your personality tells you that you want to know what it is, effort's going to be a little easier for you because you're naturally curious. If your personality tells you, I don't want to know what it is, it's okay. It will just take a little bit more effort. You have to fight that inside you, fight that move to get away from something that's unfamiliar. Like, okay, I'm supposed to do this. All right, all right. Right? This is the long arc of a career. You look at facts, you look at analysis, you take conclusions. You understand what effort means. And I want to be clear that just because it takes effort and it's harder than you think it will be, never have I said it's so hard you can't do it. No, that's not what I said. That's not what I said at all. You can do it, and it will be more satisfying when you do it than you think it will be. It's just going to be a little bit harder. Well, why will it be harder? Because of this page. Because I'm not telling you that all you have to do is wait for me to tell you what to trade. Or some magical AI bot in the world, which probably isn't even using AI. And you guys know it. You know it, man. You know it. It's in your gut somewhere. You know it. You know there's no easy way. I'm here to tell you that there's no easy way, but there is a way. And TradeMachine can get you a long way there. Can't do it all. TradeMachine can't make you do effort. The process, the plan, yeah, we can do that. Got you covered. Remember I told you to remember a slide? It was this slide. This was the slide I told you to remember. To be a successful trader, you need to focus on the long arc of a career, not just a day or a month, not even a year. And it takes a process, which I've been focusing on with our life help sessions. Takes patience. I don't have a lot to say about patience. You know, and I know either you are a patient and it's easy, or you're not patient and it's a little harder. So I can't say a lot about that. The effort part I've now expounded upon today. That's what today was. Today was about, what does Ophir mean when he says effort? So does this now make sense to you? All these things I say, and I go through all these things, and this stupid slide is at the beginning, and I repeat it every time, and same words, and oh my God, process, plan, and effort, blah, blah, blah. Do you guys understand now why I'm saying it? Like, now that I've repeated it, this is the 5th time, and really gone deeper into effort. Does this make sense to you? Just, you can report in chat, and if it doesn't make sense to you, just say no. I got an absolutely. That means it makes sense to one person. I got a yes.
I was raising my hand.
There's a 3 getting there. Yes. Yep. So there you go, guys. What you're doing right now, what is happening in your mind relative to just this, I'm not trying to make this bigger than your life. What you're doing is you're putting on effort. You're willing to sit here and listen to me, repeat the same thing, and then go a little bit deeper each time. You're doing the effort. You're succeeding. Right now, in this moment, you're winning. This is what it takes, and you are doing it. You're winning. And since you're winning, and since this is starting to make sense to you, then the truth is, you've given me a great gift. That I'm able to share what I know with someone else and they can understand it. And I thank you. Thank you. I appreciate it. Now, I'm going to go into TradeMachine. Next session on Thursday is going to be Jason doing a deep dive on the Today tab. Like, he's going to go through the nooks and crannies. If you were going to a doctor, this would be a proctology example. He is going to go up there and show you things on here that you're going to be like, I didn't know that. Because there's 2 ways to use TradeMachine. Well, there's 3 ways to use TradeMachine. One is what I did in the last 4 sessions, and I'm going to review now, which is to use the backtest tab, grab pre-made strategies, look by sector, look by time frame, add the alerts. Those alerts are, you made them, and it's going to be across a portfolio of trades. You're going to get either texts or emails or both, and that's your portfolio of trades. The other way is to use the Today tab, which is naturally a portfolio of trades, naturally, as long as you're not choosing just one box. The third way is to do both, to use a little bit of the Today tab and a little bit of your alerts. I think that's what most people do. But if what I'm about to show again is just not very tasty to you, okay, then that's the effort you don't want to put in. Don't give up on yourself yet. Let Jason talk about the Today tab. Okay, that's next Thursday. So all I'm going to do now is go to the backtest tab, and I'm going to repeat what I did before, but much more quickly. Fundamentally, this is how I use TradeMachine now. I take a backtest. So all I did is I clicked Save Backtest as a drop-down menu. Everyone has these. If it says CML in front of it, that means it's ours. You can add any strategies you want. You can have a list of 3,987 strategies if you want. It doesn't bother us. These are just the ones that everyone has. And you can see the ones that have AI, they have this sort of, asterisk AI, and are more coming? Yeah, of course they are. And the one I did last time and I started with was spread the sell-off. So you just pick one. It doesn't matter. Choose the one you want. And you just click load. And just give TradeMachine a second. It's going to load a ticker. And you're like, okay, it spread the sell-off, right? Okay, that worked. That worked. The backtest dates are actually saved, so you probably want to bring it to the current day. So I just click 3 years. That's all. And then I say, okay, let's try this on portfolios. You go to your portfolios. Every TradeMachine has these portfolios. You can add your own portfolios. It's NASDAQ 100, Dow 30, whatever you want. You let it run. You check for two things. You check that the summary at the top, which comes at the end, is strong. That's what I like to do. I want to make sure that the strategy I'm looking at, whatever the strategy is, doesn't have to be this one, is strong in the sector. If it is not strong in the sector, then I'm not going to do that trade probably in 2024 for that sector. I could do this trade for another sector. And I showed that in Fade the Dip. I showed a Fade the Dip. I showed that technology didn't look so great because it's been so volatile that vol might have been underpriced. I'm going to go easy on Fade the Dip for tech this year. I'll do it for other things. I showed it in healthcare. I showed it in financials. Right? And then after you have that kind of first checkbox, then if you like, you look for the ones that perform the best. So let this load. It's just a reminder that if you're a standard TradeMachine member, so you're paying monthly, you get to do 50 tickers at once. As a TradeMachine annual member, we have a special name for it. It's called Platinum. You get to do up to 200 tickers at once. It just makes this process a little faster. You don't have to. You each have the same power. Also, the back tests are faster for annuals because we can commit more to your account with Amazon. We can prepay, which saves us a little bit of money. So the back tests are just faster for your annual. Having said that, if you're monthly, it's okay. You can do all of this. It might take a little bit longer. It's fine. It's not like you don't have the same program. Okay, so as we recall, this did really strong in technology. I sort by average trade and I choose the ones I think that I want to know, right? These are the ones I want to know. I'm just looking at the wins, the losses, and the average trade. Just go down the list. That's it. 6 wins, no losses. Here's Microsoft. Love to get that one on Microsoft. Or just go down the list. That's it. When I've got the ones I want, I simply click Add Alert. And that's it. It's already loaded. You don't have to do anything. If you want, you can give yourself a note. If not, what you're going to get is this link. This link is that link is this. And they just say, whatever. This is spread the sell-off, and this is in the NASDAQ 100. That's just a reminder for me. And you click Add Alert. That's it. And you try the next sector, right? I'm going to go a little shorter now, like the mega banks. Just, I don't think the mega banks are a sector, but it's fine. You choose another sector, see how it does, check them, check another sector, as many as you like. What I was showing was financials, technology, and healthcare. They tend to be fairly liquid. Check, add them to alerts. Do it for at least 4 strategies. Why 4 strategies? Because we want a portfolio of alerts. Why the 4 strategies that I showed? Because that portfolio of alerts, those 4 trades are actually a portfolio. You're buying vol, you're selling vol. It's for a bear market. It's for a recovering market. It's for a bull market. I just happen to choose those 4 because they make a portfolio of alerts. So I don't have to do 11 help sessions and show you 11 different strategies. And it's not an accident that those 4 also have our AI built in, because I know that with those 4, I have a portfolio of alerts. Then you check the next strategy. Fade the dip with AI. Load it. Let TradeMachine load a ticker. Bring it to 3 years. And off you go. Right? We'll just do the mega banks just to make it shorter. But okay, it's only happened 5 times in 3 years in these mega banks. 4 times for Citi and 1 time for JP Morgan. Right? And check what you want to get alerted to. That's it. That's it. Now, if this is too much effort for you, okay. We each have what we can and can't do because of work. Next session, Jason is our CTO. He's also the one who created TradeMachine. He's going to show you the Today tab where it's all done for you. You don't get personalized alerts on the Today tab, although you can a little. But if you don't want to go through this process, probably takes half an hour or an hour. When you're as a TradeMachine member, when you start, probably takes about half an hour to go through those 4 strategies or whatever strategies you like, go through 3 sectors, check the ones you want, add them to alerts. If you don't have the half an hour to add, okay, who am I to judge you? I don't judge you. You're the only judge of you that matters anyway. So that's it. This was simply a review to make a point that I didn't just choose these trades for fun. This is very much on purpose. One thing you can trust of me is if I'm going to take you on a journey, I know where we're going. I know where we're going. I plan. I plan. I'm good at planning because being a successful trader requires the first P, a plan, process. You can rest assured I'll do that for you. Whether or not you'll like what I have to say, I can't promise you that. Okay. That's it for the formal presentation. We can take Q&A tomorrow. Sorry, not tomorrow. Thursday is going to be the Today tab. And now if you have any questions, please feel free to ask and Max will be happy to answer.
Beautiful presentation. Beautiful outfit that you're wearing today, by the way. Nice new outfit. Very nice.
Little wintry.
Please put all your questions in the chat. There is one question in Q&A, which is basically, where can I find the previous Zooms?
Sure, I'll show it right now.
Thank you.
Share my screen. Okay. So when you're in TradeMachine, you go to the Learn tab right here. Okay.
There you go.
And when you click on it, live help sessions.
Okay. First chat question. Some of the alerts on the Today page and my personal saved alerts have terrible liquidity. It would be nice to have a filter that I can set liquidity parameters going forward. Nonetheless, do you have any suggestions on a workaround? I tend to use the Theo price and put an IV that I'm happy with. And if I get the trade, great. If not, other trades will come along. It's a great philosophy to have. I personally, if I don't like the bid option spreads, my definition of liquidity for an option trade, I'd say 95 out of 100 times I will skip the trade right there and not do any further analysis on that alert. It's one of the first things I look at. If you really need to put that trade on, I caution you, as hard as it is to get the trade on in a quote unquote terrible liquidity market, it's going to be 5 to 10 times harder to get out of the trade when you want to get out of the trade, whether you're winning or losing. But if you do, I think using the Theo and putting in a price that you're willing to get in is a very good way to go.
Yeah, soon in the next few months, we'll be introducing a liquidity index, proprietary. It'll be like 1 to 100 or 1 to 10, you know, and like anything that's, maybe say like anything that's 7 or higher, I want to, you'll kind of reset your alerts. You'll have another technical open condition. And if it's less than 7, I'm just making up, I don't know if 7's the number, but you just say, I don't want to know, I don't even want to get this alert. And it'll also be on the Today tab, so you can slide
Right.
back.
Right. And one thing I forgot, but I remembered while you were speaking, before the liquidity index comes along, if you look at the Today page, and I'm sure Jason's going to cover this on Thursday, what's displayed is all symbols, all stocks where an alert has been generated. You can easily cut that down to the largest 500 stocks.
Yeah, so
to
this
the
is what Max is
NASDAQ,
talking about right here.
or to the NASDAQ 100 or the Dow 30 if you want to be that small. And that'll reduce the number of alerts you're seeing on the Today tab, as well as if the theory is the larger the company, the liquidity, the option liquidity should be better.
Yeah.
So that can help as well.
Yeah, so it's just across the top.
Right. Okay, is this recording going to be available? Of course. Within hours, definitely by tomorrow morning. And it'll also be in the Learn Center, in that Learn tab that Ophir showed us. Okay, now we're getting a question from somebody that I really appreciate in community, and he's calling me out as he should. Why is it worth selling a short leg of a diagonal for less than 30 cents? and the width of the spread is $2.50. I
What's
did
the
that trade.
what's the cost of the long option?
The spread was it was like the 150, 152 and a half in both calls in JPM.
But
And I wanted
how much was the 150?
I paid 245, and my short option was 28 to 30 cents. I can I can say that in general, if it's much less than $1 for the short option, I try and pick another long and short where there's more decay in the short option. But I wanted a JPM trade, and I put it on for 245. The last time I looked, I'm now jinxing myself, but the last time I looked, it was trading for 279, 280. So I can get out for 20 cent for 20% if I want, but I'm gonna let it ride for a while. But you know who you are. Um, the person who asked the question, since we're not mentioning any names, and you're absolutely right. It is not the way a good trader should operate.
I would do it. I have no issue doing it.
All right, there you go. All right, then we get a whole bunch of diversifications out, allocations and risk management plans. And okay, someone has dollars on all four strategies all the time. If all four trigger symbols, be selective on market condition. Oh, that's a question. Should they have dollars on all four strategies all the time? I think that's something you strive for.
Yeah, it does. You don't have
Or
to have
similar, or similar.
right. You don't have to have the same dollars on every one. Right.
Right.
It doesn't have to be like equal weighted.
Yeah.
But in general, as you're trading, I mean, there are going to be times where you don't have all four on or whatever. It's not. It's the long arc of in general. That's kind of what I do, and we can't provide trading advice. I could tell you what I think, but that's just what it's just. This is just opinion. I can't. It's not advice. We're not allowed to give advice. I'm not registered to give advice. Not licensed to give advice.
Can I give my personal opinion?
You give a personal opinion, of course.
Okay. Because I usually say this is my personal opinion. I don't want to be breaking any rules, though. I don't want to get you in trouble.
No, it's freedom of speech, man.
Yeah, so just to expand on that question while I'm scrolling down to all the yeses and thank yous. I usually have a bias. I have a long delta bias in my portfolio of option trades,
Me too.
both short term and long term,
Me too.
because most of the alerts and I trade the CML Pro top picks most of the time with longer term option spreads. So I'm always looking for short delta trades. Number one. Number two, I also have some hedges on pretty much all the time between 10% and usually between 10 and 30%, sometimes a little higher of the value of my portfolio, just to prevent, a major down move and just getting killed. I want some kind of protection. That's me. That's my personal opinion. Makes sense. Successful trading is hard work. In doing this, I found myself staying away from any trade. Okay. In doing this, I found myself staying away from any trade that did not have a minimum of 3 or more trades because I did not feel just 1 or 2 trades was sufficient history to use. Is that a plausible thesis? Absolutely.
Yeah, absolutely reasonable. Yeah.
Yeah, yeah. I go with 2 or more on 3-year. I personally don't worry if when it gets down to the 1 year, there are not any occurrences. If there are profitable occurrences on 3-year and 2-year, and 3-year has at least 2 occurrences, I will take the trade if I can get filled.
Yeah, I'm there
That's
too. As long
that's
for
me.
me, the sector has to have done well because if the sector's done well, then I feel like there's this group of stocks behaves a certain way, and I feel like it's a little bit less of like I'm not actually looking at two back tests. I'm looking at 300 back tests, and I'm picking these three, for example.
Okay, from another favorite from community. Okay, so I have a question about this. When you have skew and kurtosis as a trigger, how many years does data go back for that trigger?
2007.
2007. If it doesn't go back before 2023, say 2021, does the trigger just ignore that condition? Well, we don't have that issue. All right. How did you determine the delta in expiries for the pre-earnings diagonal save backtest? Based on your previous experience? Based on backtesting different deltas and expiries? I think it's the latter.
Yep.
All right. Our previous presentations archived somewhere. Somewhere we've answered that question. It's in the Learn tab. And you probably got an email about it as well, at least for the last four.
Yeah.
Um, some more thank yous. Apologies if this is covered elsewhere, but can you test strategies with a delta 5 or 10? You can test strategies with delta 5, 10, 1, 30.
So
You determine.
let me just show so people know how to do it. But yes, that you can test any delta you want. So we'll go to the back test tab. I'm going to show a silly trade. I just want to show you something. Just so I'm going to just do Apple. This is not. I don't think this is a good trade. I'm just showing you something. This says, pardon me. This is testing buying a 60 delta call. So first of all, take out the comma. All right, you'll notice it says 60, 50, 60, 30 is all over the place. So you just go to your settings. So this weird looking thing. And
Yeah,
down here,
what is that symbol called?
I don't know. So you put whatever deltas you want. Let's say you want to check, 10 and the 5. Just save it and off it goes. Okay. It's also a good lesson on win rates versus gains, right? Options are levered. So the win rates are going down, but the total return is going up because apparently one or two of these trades were huge. So yes, you can backtest any deltas you want.
Okay. Once I run the scans, how often do I run them again, or am I good for the next few months or longer? You're good indefinitely. The first thing I do when I get an alert, or I take an alert off the Today tab, is I hit that 3-year test length button,
Yeah.
and I rerun the back test. Because sometimes things change. I had a very good alert for Goldman Sachs, one of the favorite stocks that I like to trade. And I received it, I guess, on Friday. And it had the date ending in June of 2023, and it had great results. I think it was pre-earnings, one called Diagonal. And when I hit the 3-year test length, those good results disappeared, and it was not a good trade, and I had to skip it. So you always have to back test when you get an alert that ends on the current date. Thanks, Ophir. Appreciate the repetition of process and principles. I understand the trades TM gives me. What would be effort for me? Please give me a short example.
I think I did. I think it takes a fair amount of effort to do those 4 trades, go through 3 years and 1 year, go across at least 3 sectors, choose the sectors that work, that you feel satisfy what you want, the time frames that satisfy you want, set those alerts. When you're receiving alerts, write down what the plan is. Don't think you're writing it down, write it down. Literally, write it down. And then start looking at your book. You're like, wait, I have 7 pre-earnings diagonals on. Fine, but do you have anything else on? Because then that's just one type of trade, right? So the effort is saying, man, I love this alert, but I have like 8 of these on and I only have 1 of the others. Part of the effort, that's actually part of the patience, is saying, okay, if I'm going to do this, I got to do something else. Otherwise, I don't want to pile on the risk. So maybe you want to close one of your other ones and put the new one you got, or just skip it. That's a part of the effort. Part of the effort is not just blindly to getting the alerts, right? It's like, I got too much risk in this one direction. Or alternatively, if you're like, no, I really want to have this risk on. Okay, then just know the rest. It's risk management. Risk management can also mean I want to go big right now. Okay, but just know it. That's the effort. That's the effort. Knowing, don't let your portfolio be an accident.
Yeah, or you have 7 of them on, you get this fantastic alert, you know it's worked the last 4 times that you did it, let alone it's got great results going back 3, 2, and 1 year. So you close one of the other 7 if you really need this one at some point in your analysis. Okay, when you show the back tests and the average stats, e.g. win rate, return, etc., at the top of the table, will future roadmap include a summary / averages that adjust for tickers you have ticked for alerts? What I
Oh,
do,
interesting.
just clicking them on the just clicking the box won't change the total line. But when I'm done doing my 3, 2, and 1 year analysis, I make a new back test just with the symbols I've created, and I run those 3 year, and you'll see different numbers for the total line going across.
Yeah, I'll show you
And
a trick, guys.
they'll be better.
I'll show you a
There's
trick.
another trick.
Yeah. So go to portfolios. Let's just, again, I don't want to run a whole big portfolio because, you know. Okay. Magnificent Seven buying calls. Hey, look, it works. Okay, this is not. Let's pretend just ignore the numbers. Let's say, oh gosh, I like. Oh, that's interesting. Look at that. Checkbox aren't there. See that?
Yeah. What happened?
I don't know. It's a bug. All right, I'll do the Dow 30. So let me show you a trick. And I definitely do this. So let's say I did the Dow 30. Oh, look at that. There's a bug. Hey, Mandy, can you show Jay this bug? The checkboxes are gone.
Yep, got it.
So let me select a strategy and show you how to go. Let's just do pre-earnings diagonal. And you're like, yeah, I only want to do the ones that work. So we'll do 3 years. We'll do the Magnificent Seven. Okay, ignore it doesn't matter. I'm just going to click a few. Okay, this, I say, oh, I like these 3. So go to add alert. Look what it magically does for you. It takes the symbols for you. So when I take these symbols, I'm copying, right? I'm copying.
Oh,
Yeah.
I write them down.
I go to tickers, right? And I just,
That's fantastic. Why didn't I see that?
right. And then I click tickers. Sorry. Then I let it run those and it will. And if this was longer, it has to, if this was like several tickers, it would give you the summary at the top. So that's
Right.
one tricky way to do it. It's also a way to then you can just set this alert. And then when you get your alerts, you'll only see the tickers that interest you. So that's kind of a little bit of
Yeah. I do that totally manually.
Yeah.
And thank you so much.
Yeah.
Saved me a lot of time.
Sure.
Hey, Ophir,
Appreciate
try
it.
that again. It's working for me.
Okay. Yeah, I just worked on one group. That's okay.
All right. When setting alerts, I want to avoid inserting my phone number when setting alerts, but I haven't had luck in inserting my phone number as a default, so I don't have to repeat the request, including using the bulk alert tool. Is it possible to have the phone number as a default, like the email address?
No, because then it will get marked as spam. But what you do is add alert, or you just go to your alerts.
Yeah.
And
You
then
can do a bulk alert.
bulk update alerts,
Yeah.
set a new phone number, 555-555-5555. Set all phone number, but right, clear all, set all, and then you got it. So I'm gonna set my phone numbers. Well, I'll never get texts again, but it's fine. Okay, now all of my alerts Oh, 332. Yeah, that's my phone number. So I'm going to stop sharing my screen and I'm going to put mine back because I actually do want to get those. So yeah, I'm not going to show my phone number, but I don't like that. So, okay.
All right, I'll continue.
Yeah.
Someone said in chat that it's a good suggestion to limit the Today tab to the top 500 tickers. Not a guarantee, but they're better chance of liquidity. Okay.
And soon enough, we'll have a liquidity index. Give it 3 or 6 months and you can actually just do it that way. And then it doesn't even matter.
Yeah. Yeah.
Okay. So you used your bulk update tool and it didn't retain your phone number. Okay. Email support. Tell us which alerts you want to have that phone number or all, and we'll take a look.
Where'd you see that? Oh, you're at the bottom of the chat?
Mhm.
Okay. For strategy selling options, how is the percent return calculated? If you're selling options, you have a credit. And the percent return is on the credit that you received when you put the trade on. So if a strategy has a 50% limit as the closing strategy, it would be 50% of the credit that you receive. Are you giving me, you're not smiling. Are you,
So for stops and limits, that's exactly it. So when you're like, what does this 80% mean for stop and limit? That's how a percent return is calculated for stop and limit, because that's how traders usually look at it. But for the actual risk, right? So you want to go to the Learn tab. You can just ask, like, what about amount risked? How has that happen? That's actually a more complex thing. How is amount risk calculated? And you can read about it. So for a stop or limit and on a credit, it's exactly what Max said. Let's say it's $1 limit. Sorry, a dollar credit. A 50% stop would be if that went up to $1.50 because you're short that, right? And a 50% gain would be if it went to 50 cents. How we're actually calculating the amount, the average trade. So those summary lines, no, that's actually a bit more complex, and that's how we do it. You can just read how is amount risk calculated.
thank you. I'm a big fan of running tickers through the ProScan screen. Are there any of those older strategies that you no longer recommend, i.e. the bull squeeze, the bear mammoth, three inside up?
I haven't had great success with some of them, but I would just I would do kind of what I showed in the last webinars, or this one is, or live help, sorry, is just I would just pick the strategy, pluck it out, run it against a portfolio, see how it's doing.
Yeah.
I let the numbers speak for themselves, really.
Right. Okay, as second question from this gentleman. I'm not even supposed to say gentleman, from this person. Ophir, Michigan or Washington? And then I'll tell you my answer.
I think it's going to be Michigan because I think Jim Harbaugh is going to go to the NFL after the season. He wants to leave a champion. But there used to be a Pac-12, and I'm a Pac-12 fan, so I want Washington to.
Yeah, I've been rooting for Washington for weeks. I want a new team to win the championship.
Well, Michigan hasn't won one. So we got a new one. There's no SEC team in the
Michigan never won one?
I mean, not never, not under Harbaugh. They've
Oh, not
definitely
under Harbaugh. Okay, gotcha. All right, very dedicated coach. He puts in the effort. There's no doubt about that.
That's right.
Is it possible to go from a Today tab ticker to the sector it is part of?
No, we can't do that yet. It's an interesting idea.
Okay, so Ophir is going to send an email to support for a future development in TradeMachine. How, when you assess bid-ask spread, what is good value for trading? If it's $100, I just look at it. You know, I know it when I see it. I'm sorry that's not a more analytical answer. If it's $100 stock and the bid ask is more than 10 ticks wide, I'm very unlikely to take the trade. I'm sure there are exceptions. since I do most of my things as spreads, I might still put the spread in and see how tight the spread market is. If the spread market, in a lot of cases, the spread market will tighten it up. So even though it's two individual options, each 10 ticks wide, if the spread market is 5 ticks wide, I might put the trade on.
Yeah. It goes into the complex order book, and oftentimes those tighten up fast. So.
But if it's a $29 stock and the options, the spread between the bid and the ask is 20 ticks, I'm moving on. Okay. For newbies to your platform and not too robust on option strategies, is it suggested to get one's feet wet? I assume that with the today feature before migrating to personal alerts.
I don't think so, but you can.
Yeah.
And come to tomorrow, Thursdays, and you'll learn a lot about the today tab. Or if you can't make it, just wait for the video.
Yeah, I think it's a good idea to start with an alert on the today tab from a stock that you know is going to have good liquidity, and to see the strategy and think about what the trade does and where the risk is and where the potential profit is. I think that's a very good idea. And don't be afraid to ask questions, and don't be afraid to ask me in chat, in community, excuse me.
I'll show people how to do that. You can keep it talking. Just
All
for
right.
anyone who doesn't know, like, where do I find Max, like, on call? Go to community. If you so choose, accept the terms of service. If not, then don't go into community. Go to Trade Machine, and then he's at chat uncle here. And then just, I have a question. And it is, and then just write it, and then he'll get it. Yeah. You're welcome.
Thank you. This is referring back to my JPM pre-earning learn call diagonal. The long is 290. All I can tell you right now is that the spread that I paid was for that long call diagonal was 2.45, and it was trading 2.8 the last time I looked, which was before this started. So I don't really know what's going on in the market right now. What conclusions can you draw, if any, for a stock or ETF that has a negative skew and or kurtosis for the previous year, but the 6 month has turned positive? Would you consider that a bullish phenomenon? Thank you much for spending your valuable time with us.
I haven't tested that. You can test it in Trade Machine. You can do a stock back test and have it where 1 year kurtosis is negative, but 6 month kurtosis is positive, and just see if you tend to get. I haven't tested it, but it's very, very, very good thing to do, I think.
Is it possible to graph kurtosis and or skew over time?
No.
It
Soon.
is not.
We will soon.
Okay, thank you. Okay. Got to thank you so much from the gentleman who called me out. You're very welcome. Thank you for keeping me honest. Is there an option for back testing using position size as a percent of the total portfolio?
No, you can set the number of contracts, but we don't have that yet.
Yeah, you can set the number of contracts, but you have to figure out what that is as a percent of your portfolio. I have been diligently trying to find a positive back test should we get a sell-off, like selling upside call spreads, and have really been struggling. Yeah, I have similar issues.
Yeah.
That's why, in my case, my personal opinion, I call it hedging, and I'll be long put spreads, taking advantage of the in my case, the /ES positive put skew, to protect myself for a significant sell-off.
Yeah.
But it doesn't backtest well.
No, short-term speculations that are short speculations are hard. Market tends to go up, guys.
Over the long run.
Mhm.
I got alerted PNC
Me too.
14 pre-diagonal on email.
Me too.
Me 3. Why isn't it on Today tab? Well, you know, if Ophir hadn't prepared a presentation, I was going to cover that. The answer is it has no 1-year results. And I will be sending an email to support, because I think in today's environment, I think we can relax that condition, especially with the back tests that have the AI component, because there are naturally fewer occurrences with the AI component. And I think if it has multiple 3-year results and it still has a 2-year result, then I personally will take the alert, even though it won't appear on the Today tab. But that's the reason why.
It's also always set personal alerts, by the way, and you don't only rely on the Today tab.
Okay. I think the comma was the issue when I tried editing it. Yes. Got to get rid of that comma.
Yes.
Also, is it possible to show the percent return for the back test based on notional value versus margin? No.
Don't have that.
All right. Ophir mentioned buy volatility is a debit trade and selling volatility is a credit trade.
Roughly speaking, that's a shortcut.
Yeah. Does long volatility mean positive Vega?
Yep.
Yes. And negative volatility mean short Vega? Yes. Once symbols are chosen before entering a trade, should we look at the chart as part of our process? If you know how to use charts and you find value in looking at charts, you should definitely look at them, and you should look at them in a related product that CML has called Pattern Finder, I believe. Is that correct?
Yeah. For TradeMachine members, it's like $99 for a year. So we just basically give it away for free to TradeMachine members.
Yeah, I know a lot of people though in our community who first thing when they get an alert, they look at the chart and see if it makes sense.
Yeah, a large percentage of TradeMachine members just use Pattern Finder just as an add-on.
Can you create a portfolio from the checked items on a strategy with 1 or 2 clicks? It's going to be a little more than 1 or 2 clicks, but you can definitely create a portfolio, a custom portfolio. Thank you so much, Ophir/Max, for the answer to the table summary question. You're more than welcome. Most of the credit goes to Ophir. I'm contractually obligated to say that, by the way.
That's right. That's right.
I used the bulk update alert tool and that didn't retain my phone number. Hopefully you've sent an email to support. Go Dogs. Is that Washington?
Huskies.
Okay, yeah. The Huskies, right. I have many alerts set from 3 to 5 years ago, and they may longer be helpful. I have trouble eliminating this. Please help. Go into the alert tab.
Yeah, I'll show you.
Then you can delete them right there. There's a little X all the way over on the left side.
Yeah, you can go by the date they were created. Right. So let's say you want to delete these. You just X, they just delete. So here, I'll delete.
Right. And I've done that for big deletions of old alerts, but also even if I get an alert today via email and I execute the back test and I fix the date, so it's 3 years starting from going back from today's date, and it no longer works, I just go into the alert tab and just delete it right there. Okay, hey, you guys have changed sides. Ophir was always on the left. Is that true? I thought you were always in the
I
middle.
think I'm always on this side. Yeah,
Well, we like to rotate.
yeah, exactly.
What is 10 ticks and 20 ticks in money terms, please? So, 100 ticks is $1. So 10 ticks would be 10 cents. But everything gets multiplied by 100. Have I answered the question sufficiently?
I feel like you have, yeah.
Okay. Is there a way to test between specific dates? Yes, there is.
Yeah, here, I'll just share the screen again.
Thank you.
Yeah,
You are great with that.
So right on the back test tab, you just enter your dates. And
Yeah.
yeah, that's it.
Start date and end date.
Yep.
How many trades would you consider statistically significant for a strategy to actually implement it? Many of the default strategies only seem to return a few trades over many years. Why don't you answer that one before I go to the next one?
That's why I look at sectors.
Okay.
I want to see that if it works in a sector, it works in a type of company, then that's what I'm using for statistical significance. Then
Right.
I'll go and try and
But
find the best ones.
even more general than that, you've developed these strategies by doing thousands of back tests.
Yeah.
Right?
Mhm.
So I have confidence, even though, I look at JPM and it may be 6-0, or it might be 4-1. I know that this is a strategy that Ophir and the TradeMachine team have back tested thousands of times over hundreds of different stocks, I'm sure.
Yeah.
So
I actually share a lot of videos with that. Yeah.
so I think it's a reliable indicator, something that can be used. Is there a way to run through a bunch of parameters in an automated manner with
No.
Python, for example? Thank you very much.
We don't allow automating. We don't allow automation. Yeah. You can get a CML TradeMachine API, but that's pricey. So that's for institutions, but you're welcome to do it. You get your own environment, AWS, and do whatever you want.
Would you ever use UOA to determine a trade? I don't know what UOA means.
Me either.
Okay, tell us what UOA means.
We got to go in 2 minutes.
Okay, sorry. I never look at the clock.
Oh,
Thank
unusual
you.
options activity? No, I don't care about unusual options activity.
Oh, unusual options. Ah, okay. Is there an option in TradeMachine to find a volume profile? No. I think there are multiple people named. I'm not going to say. Yes. Yeah, okay. If it wasn't you, I apologize. All right. Great question. Someone else is commenting. Great question on PNC and great answer by Max and Ophir. Okay. Not mentioning any names. Is there a way to load tickers with an entry and exit dates? Run the back test for specific tickers between the custom entry and exit dates. Yeah. I think Ophir just highlighted where you can set the start and the end date, and you can load the tickers to the left where you enter either a portfolio of tickers or individual tickers separated by a comma or a space. Thank you. Do you have any thoughts on trading platforms? Ophir, do you have any thoughts on trading platforms?
No, and this person said they mean different entry exit for each ticker. No, each back test is going to have the same dates. So
Right. Sorry, I misread the question.
No, you didn't misread it. They clarified.
Okay. Do you have any thoughts on trading platforms? Am I allowed to answer this question?
Sure.
I personally use Tasty Trade. In the past, I've used Interactive Brokers. Before that, I used TOS. The same people who developed TOS developed Tasty Trade. I think it serves all my needs. That's the end of my promotion. Thanks. Any plan to add volume profile in the future to TradeMachine?
No, so volume. So I have a personal feeling with this. What you're looking for is liquidity, and liquidity has nothing to do with volume. Liquidity in the option market is two things and two things only. It's the width and depth of the book, right? If it's tight and deep, then it's liquid. It can be wide and shallow and have lots of volume. That's not liquid. That just means there's a lot of volume. So volume is not what you're looking for. Open interest is not what you're looking for. Is it true that options that are liquid tend to also have high volume? Sometimes, yeah, but not always. You want to look at width and depth of book. That's what liquidity is. There is no other definition of liquidity that's real, not for trading.
Okay, we've gotten to all the questions in the chat. There may be something new in Q&A. Bring those questions to the community and I will be happy to answer those questions.
Yeah. All right, guys. See you Thursday. Jason will see you Thursday with Max on the Today tab. Bye, guys.
Okay, have a good day.
Bye.
See you in community.